This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. Yesterday, I was talking with a client about gold and silver, specifically demand for metals during an oil crisis. And this is not my work. I'm going to share it as soon as it's finished. But client Jose put together some fabulous research and sent it to me this morning. So I'm formatting it, reading it. And anyway, a lot of it, yes, is Claude based, but I'm going to get to a point about why this matters. His specific focus is on global automotive industry and the oil price sensitivity. And he is in the automotive industry and he's a precious metals trader. So he combined knowledge of both and then gave some really good precedents of oil shock episodes and how it impacted the global auto market, specifically regional differentiation, obviously US versus abroad, demand elasticities, short run versus long run, transition channels, what happens obviously when crude prices rise and how it affects ICE vehicles via the EV hybrid market. This is all his research, but he shared it with me this morning. Forward scenarios, what happens at 100 and 150 Brent, that's sustained. And as you know, I have this strong conviction that we have a sustained or protracted Middle East war. So he goes through with some predictions, and obviously EV will fare better for ground transportation. Just remember, jet fuel does not have any EV equivalent. So client Brian in the refining space reminds, in particular, California is going to get hit quite hard. Anyway, so these are some clients that shared their expertise, and I have not finished this, but the point is we've got some examples here of how oil not just impacts the automotive space and the conclusions that he drew, and we were talking about this yesterday, but specifically its impact, how it channels into palladium and platinum, obviously, the inputs used for catalytic converters in internal combustion engines, and how oil demand starts to fall with miner demand, which seems like, what? Yeah. So the energy expense we've talked about a lot as it relates to 40% of the operating budget of most metal miners is energy. It's even higher than airlines. But the point is, when you start to have the ICE or the gas vehicle demand fall, and with it financing, gas prices rising, hurting consumers at the pump, you also have a dislocation in regards to palladium and platinum in particular. It actually is a double whammy. So you not only have the miners impacted greatly by the higher energy costs, so margins are constricted, absolutely, but you also have demand which falls in, especially, again, palladium and platinum that is tied into the automotive sector. XAU USD, this is gold and silver. This is on a weekly, just so you know, and some lines in the sand that are very important. This was monthly. Critical level of this 47.80. That had been a price target that I had given in June of last year. So literally in June of last year, I had given this level for XAU USD. We reached it, we got above, and then I warned January 28th and 29th of this year that we were going to have some metal volatility. Gold ended up coming in 16% and silver 39%. Long story short, we have definitely started to digest and start to flip lower. We broke already the 10-week even before today's PPI hot print. So keep this 47.80. We get below that, we're heading down to 45.50 and then 43.80. We'll look at the heat map as well, but we're already at this morning, basically this 48.20, which is not so far away from this line in the sand down here. Just keep that in mind. I think that's where we're going to go. So let's do this right here, right down here. So I don't think this is done, even though it'll get defended in the short term for a little bit, maybe bounce a good 40, 50 points potentially, but at some point we're going to head back down to this 47.80 in XAU. And you can do the same thing with silver. You can see how they are falling intraday this morning at the 100. We literally just looked at that. The more time they press, and the fact that we've already gotten below the 10-week and we're softening. I still have silver 61, this 61 that never got filled on real-time trading hours. It's headed there, big picture. I don't know if you recall when we had the big volatility. We actually had a 39% drop peak to trough, and it literally tagged this 58.5 level very, very briefly after hours, and then 61. And I remember because client Kirk pinged me and he's like, what's 61 your level? And he ended up brilliantly trading this from 61, I don't even know what, to like 81. It was so smart. Anyway, long story short, I said then it will revisit 61 during regular trading hours. RTH, that's it. We've got, I would say, this in play. So even though it's 69 right now for SLV, don't be surprised to see this roll over into 61 and tag that ghost print. In other words, it's a memory in the system, but it isn't today. Gold has done its job, and we literally just talked about this yesterday. So I mentioned this was a head and shoulders, and the first price target, this is, or was it Monday, Tuesday? I don't remember, but the point is we're right down here on this channel. See this big old channel right here? Okay, so we got this little head and shoulders, and it has started to come back in. And I said, don't be surprised when we come down to 4,600 area in this particular dollar strength moment. Dollar strength moment could get very busy. It could actually move from 100.5. That's the trigger it needs to get above. I showed you that yesterday. It could get all the way up into 105 in time. I think that's more of a between now and March time frame, where it also aligns with my equity headwind time frame. But the point of the matter is we got this little head and shoulders on gold continuous right here, and we're on the top of this channel where we had the big old shake and bake, but we very likely have a little bit of defense here and then a rollover. I would put your sights on that 4,600 area for better support, or I should say buying for those who want to get involved again. I think that would be a better location. Silver is just starting to break below 78. You can see 70 is in line for silver futures. And yes, this is shake and bake. This is my reversion to mean, geometric mean, I should say, and it is coming back into the 10-month. So this is weakness in the precious metal space. So speaking of metals, literally, after I went through my intermarket on Monday, which I showed you, and I'll re-emphasize my gold miner bullish percent index chart, I grabbed these charts. But first, let me show you that bullish percent index chart again that I went over yesterday. Here it is. This is important because I think a lot of folks are playing, present company included, in the minor and precious metal space. So you've got a situation where, remember my warning, cannot get above 100. That's just, this is an oscillator. Very, very oversold, you buy. Very, very overbought, you be careful. And you can't get above 100. And then boom, right in the kisser. And that happened twice. Once in October when I warned, and then again, January, we caught it live. The point is, this indicator is obviously falling. So this yellow needs to catch up. So that means there's going to be some basing activity down here. If it's above 80, it's very strong. It's bullish. Yahoo, ride it. It's a beautiful trend. And you can see clearly, hopefully, back in March of 2024, this thing hooked around and got very, very, very bullish and then stayed very, very, very bullish. And the point is, it's not a game of perfect, but it shows the bullish percent index for miners really, really has a fabulous kind of turn here every time it gets this inflection where the indicator goes up against my cherry picked indicator, which is this yellow line over here. It's very bullish. And then we stay up here. So we had some shake and bakes, but they kept getting bought and we kept going into overbought territory. But this one looked very different. We had a huge 100% can't get above dump. And then we had a bounce, but not a very convincing one. Even if IV went higher in the options, the underlying price did not move up. Everyone kept giving all the examples of higher silver demand and falling supply across the board and this, that, and the other thing until the oil spike. The oil spike put a kibosh completely in this sector. This sector rotation is over. So it could be a few months before it is buyable again. That's what this tells me. This tells me this is going to take a few weeks just to come back down and basically stabilize. So I know that's a little bit hard to read. So maybe this isn't as hard to read. Here's gold. It looks perfectly fine. It really, really does. Beautiful. This is the strongest. This is why I keep saying gold is definitely stronger. It is on a monthly and it is above the 10-month. And this is literally your mean is right down here. So what you're doing is you're protecting into this GLD kind of 390 area, because this can come back down to the mean before it's safe to base and move higher again. That's GLD. It's definitely the strongest. I'm just showing you in the paper markets. Here's silver, definitely the weakest. Absolutely the weakest. Look on a monthly again. This is very important. We had the big 39% shake and bake. It doesn't appear like it's a big deal, but when you put it on a monthly, look how close it is coming into the mean, which is about this 80 area. So this is the silver miners. Look how big that rejection candle is, even before today's pre-market sell-off. This is why I've been spying this. We're heading lower. Here's another example. This is SILJ. This is heading back down into the mean, which is about 26 area. And here's JDX. This is monthly again. This is a huge reversal candle of size, massive. So it's a safer bet once it comes back into this kind of 109 area, and it can prove that it can base and turn around and move higher. But right now, this rotation, you've got JDXJ, JDX. This is again on a monthly, big picture for sector rotation plays. SILJ for the juniors and SIL for the silver miners. All right, so this is your silver, huge exhaustion inside for February, pretty typical when you have a big 39% move peak to trough. And then this is the weakness. Now it's inside and it's starting to break down. It's starting to break below the December high. And that's just what typically happens when a parabola breaks and then it peters out and it comes back down. This one looks very much headed to that 58 area. All right, market's getting defended on this PPI print as expected. I'm talking equities. Right now, I'm focused, just so you know, on some of this drama that's happening in the precious metals space, because I see falling prices into the 10-month EMA for silver, for gold, for miners of silver and gold on a monthly. They're all pretty clear that we have some big, big, big reversal candles in play. The miners coming back down. They broke already the 10-week last week. These are the silver miner juniors, gold miner juniors, silver miners, gold miners. But the point is, these are the ones that are leading to the downside with silver and with gold. So even though silver SLV is 69, I still see 61. I can't get that out of my head. We went there once, we can do it again. So take care on the weakness in the silver, gold, palladium, SBSW. So client Jose was talking about this, but it was ironic because on Monday I had sized up palladium platinum parabolas that had started to burst. SBSW has a relationship into that space and ironically follows very closely, as I will share with you later from Jose's notes. And I haven't finished reading or structuring this down here, but long story short, it's negative inversely with oil prices. So very important to kind of keep that in mind. Miners are hit, but it's a double whammy for SW because it has a strong correlation with the auto manufacturing space. And look at this trend line. So this was the big shake and bake back in end of January, has rolled over officially 2 weeks ago, last week. And now look at it, it's just precariously perched. Does not look bullish. Miners are under distribution. So really be careful if you're long, which is tough. But as it relates to miners, this theme of pullback is in play. Gold is the strongest, for sure, for sure. Palladium and platinum are the weakest, for sure, for sure. But all of this I'm showing you on a big monthly candle, and we're only halfway through March. We could have a bounce, but I would still expect this monthly mean to come into view for all of these miners, because they have stopped going up January, February, and then March they tanked for obvious reasons, Iran, oil, etc. So huge reversal candles are in play.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.